Tesla is not slowing down. What's actually slowing down is the way the market is evaluating Tesla. Last week looked messy. Q4 numbers came out, the stock pulled back, and suddenly the narrative shifted to Tesla is losing momentum. But if you only look at the numbers, you miss what's really happening underneath. Hi, this is Ken. Today, I want to walk you through why Tesla didn't hit a wall. It crossed into a new phase. By the end of this video, you'll clearly understand three things. First, why Tesla's Q4 looked weak on the surface but isn't the warning sign many think it is. Second, what the market is still missing about Tesla's strategy even now. And third, how long-term investors should be framing Tesla going forward, especially heading into 2026. This is not about defending Tesla, it's about reading the company correctly. Let's quickly ground ourselves in what actually happened last week. Tesla reported Q4 deliveries slightly below consensus. Production came in higher than deliveries. The stock moved from the mid 400s and 40-something down into the low 400s and 30-something. And predictably, headlines followed. Tesla is decelerating. EV demand is fading. Growth is over. At the same time, though, something interesting happened. Tesla crossed 9 million vehicles produced globally. Model Y remained the best-selling car in the world. Energy storage deployments hit a new all-time high, and FSD completed long-distance, zero-intervention drives in the US. Good news and bad news all at once. If that felt confusing, that's the point. The confusion itself tells us something important. Let's talk about Q4 honestly. Production exceeded deliveries. That alone already challenges the idea that Tesla can't sell what it makes. This wasn't about factories slowing down. It wasn't about demand collapsing overnight. What we're seeing instead is timing distortion. Q3 was unusually strong. Incentives, subsidies, and end-of-quarter behavior pulled demand forward. Some of the demand that normally would have landed in Q4 showed up earlier. So when you isolate Q4, it looks weak. But when you zoom out and look at Q3 and Q4 together, the story becomes far more stable. This is why evaluating Tesla one quarter at a time can be misleading. Now, here's an important question. If Tesla were the only EV company seeing pressure, that would be alarming. But that's not what's happening. The entire EV industry is dealing with higher interest rates, incentive changes, and pricing pressure. Legacy automakers, startups, everyone. Within that environment, Tesla maintained production, kept its core models competitive, and avoided any structural breakdown. That's not what a company in real decline looks like. Here's where things get interesting. Most investors are still evaluating Tesla through a very old framework: units sold, quarterly deliveries, vehicle margins. Under that lens, everything else looks secondary. But Tesla itself has quietly shifted priorities. Energy storage just posted record numbers. Software continues to compound. Autonomy is moving from demo mode to real-world usage, yet the market barely reacted. And that disconnect tells us we're approaching a transition point, not a slowdown. So what does all of this actually mean for investors? Let's be very honest here. Tesla is not an easy stock in the short term. Quarterly numbers still move the price. Volatility is high, and headlines will continue to swing sentiment. But this phase is revealing something important. Tesla is slowly transitioning from a company measured by units sold to one measured by systems deployed and utilization over time. That shift makes the stock harder to price, but also more asymmetric for long-term investors. Here's the unexpected part that most people still miss. The most important metric for Tesla's future is not delivery growth, it's idle time. Traditional cars sit parked about 95% of the day. That's terrible utilization. Once autonomy scales, that changes everything. A vehicle that runs most of the day doesn't need to be sold in massive volumes to create massive value. This is why looking only at how many cars Tesla sells is increasingly the wrong question. This is where FSD, Robotaxi, and Cybercab all connect. FSD is not just a driver assist feature, it's the foundation layer. Robotaxi is the service layer, and Cybercab is the hardware optimized specifically for that service. Many people ask, how many Cybercabs will Tesla sell? That's already the wrong framing. Cybercab is not a product you sell once. It's an asset that runs for years, generating value continuously. That's a fundamentally different business model. This is why comparisons with companies like Waymo can be misleading. Waymo is highly controlled, highly polished, and geographically limited. Tesla is doing something riskier, but potentially far larger in scale. Mass market vehicles, consumer ownership, over-the-air software. Tesla is choosing scale over perfection. That choice carries risk, but it also opens a much bigger ceiling. This also explains why Elon Musk rarely talks about quarterly delivery numbers anymore. Listen carefully to what he emphasizes instead: autonomy, AI, robotics, energy systems. That's not deflection, it's a signal. Inside Tesla, selling cars is no longer the end goal, it's the entry point into a larger network. Looking ahead into 2026 and beyond, this is the scenario investors should be watching. As autonomy improves, utilization rises. As utilization rises, revenue per vehicle explodes. As revenue per vehicle rises, the importance of pure delivery growth fades. At the same time, energy and logistics quietly scale in parallel. This isn't a single product story, it's a system story, and systems take time to be recognized by markets. So let's zoom out and simplify. Tesla is not slowing down. Two things are happening at once. The EV business is maturing. The AI, autonomy, and infrastructure business is just getting started. That overlap creates noise, confusion, and mispricing. For short-term traders, that's uncomfortable. For long-term investors who understand the direction, it's familiar territory. If this breakdown helped you see Tesla from a different angle, feel free to leave a like. It helps this channel reach people who think long-term. I post daily analysis focused on where Tesla is going, not just what the headlines say. Subscribe if you want to stay ahead of the narrative shift. Thanks for watching. And as always, let's enjoy life in the future with Tesla. Before we wrap up, let me take a moment to introduce myself. I drive a Tesla Model Y, and at home, I've installed a Tesla Powerwall, so I actually charge my car with solar energy. I truly believe Tesla is shaping the future, and that's why I share the latest news and insights here on this channel. I'm from Japan, but I want to connect with Tesla fans all around the world. That's why I also create an English version of my videos. YouTube now lets you switch the audio into your own language, so you can enjoy it in whatever language you prefer. Most of all, I'd love to connect with Tesla fans everywhere so we can support Tesla together. I also share updates on X, so feel free to follow me there and let's connect. And if you haven't already, please subscribe to this channel. I'd really appreciate it. Thanks for watching, and I'll see you in the next video.